if I can manage to do so. So welcome to the first ARAC for the new municipal year. I say I'm delighted that we've got 6 out of the 7 constituent members being represented by last year's councillors. So that obviously gives us great continuity, which is really good. And Councillor Kettle is well known in these parts. So you're very welcome to join this committee. Thank you. Right, in terms of, I don't know if there's anything further to say in terms of welcomes. I've explained a little bit to Councillor Kettle in the pre-meeting who I am, and everybody else knows me. Councillor Kettle, do you know the people on this side of the table, however?
Yeah, they're all new to me, I think.
Oh, okay.
Yeah,
So we can probably do that then.
They're all new to me.
Yeah.
Good morning, each.
Good morning. I'm Peter Strella and I'm the WMCA's risk manager, and I'm now working the wider legal and governance team.
Okay, thank you.
I'm Helen Edwards. I'm the monitoring officer and chief legal officer.
Thank you.
I'm Matthew Dean, the head of internal audit and information governance.
Okay.
Hi, Louise Cowan, head of financial management.
Good morning, Craig Evans, government services officer, and I'll be noting the minutes and actions of this meeting.
You only met. I'm Ram from Coventry.
Mark, chair of 4 years. Oh, yeah, sorry, sir.
Zach Francis from Grant Thornton, the external audit.
Okay, yeah.
Rose Martin, Walsall Council.
Okay.
Edward Fisher, Solihull.
Councillor Johnston, Samuel.
Okay.
Just now from Wolverhampton City Council.
Councillor McCarthy from Birmingham.
Another name. Thank you all. I'm Ian Kettle from Dudley and you're Stourbridge. I'm on Dudley MBC.
Very good. Who Councillor Kettle, because he attends overview and scrutiny and still does this year. So he's going to be, he has the privilege of being here more often than I am. Right, apologies for absence. I think we've already noted we had apologies from Councillor Evans. We had no response from Councillor Woodall. We need to go back to Worcestershire and just say this is not acceptable. Councillor Dean accepted the meeting. So, and as I say, Warwickshire, we understand will be meeting on the 5th of August to nominate someone to join the committee. So that's where we are. Declaration of interest. Members reminded the need to declare any disclosable pecuniary interest they have in any item being discussed during the course of the meeting. The receipt of any gift or hospitality should be declared where the value is thought to have exceeded £50. Anything that anybody wishes to declare?
Yes, bus pass.
A bus pass.
Old age ones.
Oh, if we're declaring bus passes.
That's a bit everybody say.
I'm not sure that's a disclosable pecuniary interest, but thank you. Or a gift. Right, chair's remarks. I suppose the one thing to observe at this time, and I've mentioned is, as you know, my 4-year term comes to an end at 30th of September. Let's keep saying I'm stepping down. I'm not stepping down. My term ends, but we'll leave that. So we had a process to identify a replacement independent chair. We did make the offer of the position to somebody. Unfortunately, that person's current employer was not then prepared to release her to take on this role. It's unfortunate, I think is the polite word to use. So we have reopened the process. That closed on Friday. We have 7 applicants. We will be having a meeting straight after this meeting just to decide how to take that forward. But the plan is certainly that we should be in a position to appoint, for the board to appoint my successor at their September meeting, and thus that would enable me to step down at 3rd of September and that person take over from the 1st of October.
Mr. Chair, how does that process work out? Who interviews them or who selects them?
Do you want to?
Okay. So
Yep. So there is an officer panel who will conduct a first interview, and then there is also a stakeholder panel that will conduct the second interview.
So that includes myself, the chair of overview and scrutiny, Councillor Burrow, and also it was actually the deputy chair nominated for from TDOS as well. So you've got the 3 chairs of the scrutiny functions as well as
Much broader than I imagined.
Yeah.
Yeah, understand. Okay.
So hopefully thorough. Just need to find somebody. Yeah, it's a good list this time. Yeah, it's a stronger list this time.
For any reason,
Yeah.
we've got backups.
We have. We have checked that they are going to be able to do.
We have checked and double checked. Yeah.
Good, thank you. So that was it in terms of chairs remarks from myself. Right, Helen, over to you in terms of appointment of vice chair.
So the next item is appointment of vice chair.
Use your mic, please.
Apologies. The next item is appointment of vice chair. I think we've had 1 nominee so far. Did anybody else want to, any further nominations? In which case we have Councillor Lacker has put his name forward as a nominee. Does the committee want to vote or just indicate whether that's agreed that Councillor Lacker be appointed as vice chair?
Agreed.
Yeah,
agreed.
Thank you.
Congratulations.
I don't
Councillor
have
Lacker.
moving around.
Thank you. Give your support again for another few months. Very good. Right, minutes of the last meeting, which was the 7th of April. I'll just say these are good minutes. Thank you very much. Very comprehensive. Thank you very much. Any questions in terms of obviously those who are here? People comfortable that they're a fair and accurate record of our discussions first of all. Councillor Martin.
I'll second it.
Okay. Okay. Right. People happy? Confirm their accurate record.
I've got a grumble. I couldn't find the mistakes in your spelling mistakes. Sorry about that.
There are a couple later in the paper
Yeah.
which I've picked up just in case you didn't
I did,
cancel
because
that.
I couldn't read on the screen.
But not in the minutes. So there you
Yeah.
go. In terms of matters arising therefrom, just a couple of things from me, if I might. Under 72, Craig, the 3rd paragraph down, I think what I was asking for was not a statement to go in the annual governance statement, but a paper that comes to the meeting at which we approve the accounts, which just says, this is why you as an ARAC should feel comfortable in signing off the annual governance statement. So it's just an internal paper, not something to actually go in the report itself, if that's okay. I don't think the Black Country. I think the Black Country IMO has come back to the board, has it? I don't think. Black Country IMO hasn't come back to the board yet. No, I don't think it has. And then the only other thing was integrated settlement readiness check, Paris 79. I requested a further update on this to this committee in the autumn, so maybe we could add that to the September agenda. That'd be fun. And actually on adult education, I think Councillor Martin raised the point, I raised the point, but I think we'll pick that up when we talk about your plan for the current year. That's okay. So that was it. Anything else? Any other matters arising from anybody else? Not. In terms of the action list, again, thank you for that, Craig. I think there's a couple of things obviously to add in for 2025, but thank you. And then the same thing applies on the forward programme. We just get the integrated settlement update in September. And then when we do on the 25th of November one, when Grant Punton will be approving the accounts, we hope. If we could, I think it's covered actually through consideration in the annual governance statement. So it's probably within there anyway. Great. Okay, anything else on the forward plan? If not, in terms of reference, see, these have been put in to the first meeting of the year, and it's important that annually we reconfirm what our responsibilities are. Happy to take any particular questions on this. Unfortunately, we have missed a bit from the terms of reference, so they will need to come back to the next meeting. So there's a section around our responsibility around financial reporting and accounting policies, and external audit, which seems to have not featured in these papers. So we need to address that and bring it back to the next meeting. But in doing so, Sorry, I'll use the microphone. I do apologise. In doing so, pick up any other questions that people have. The one point I was just going to make was under membership, it does reference the option for a second independent member. That is as recommended by DLUC, but it is not something that we have pursued so far. Previously, this committee had a representative from the LEPs, but obviously with the ending of the LEPs, that position fell away and we have not replaced it. So this at the moment is proposing we would have an option of a second independent member if we so chose, but there is no current proposal to appoint a second independent member. So that's the only point I was going to say. Councillor Jasper.
Page 20 of this document, it still refers to the PFIA standards, which were replaced, I believe, in April, audit standards. There's a new code of conduct that to be looked into as well.
Yeah, back on. Thank you. Good spot. Is that a question, Councillor Lacker?
Yeah, just same grumble rather. I'm going to make it formally now again. Yeah, what I was saying earlier, just the issue of quorum. We have a struggle. I think it should be minuted for that reason. So the authorities or other authorities may have the same problem, so they can be lobbying the government to change their structure. So it should be easier rather than just being tied up in and that's the problem which is we have suffered previously a number of times. So if the quorum is addressed, then it'll be a lot more smooth. Even if it's in the statute books or whatever, the government should be able to address it. Thank you.
Given how many new authorities came into existence last year, I've always checked what Greater Manchester have, which is a complete different structure. They have 3 independents and 3 constituents, don't they, on their ARAC? Just if somebody can just dig out what some of the others do, but to some extent, the legislation that's going to come forward in due course may bring greater consistency to all of these things, I imagine. Okay, thank you. Right. Unless there's anything further, we'll move on to item 11, and we've almost caught up time, which is the financial monitoring report for last year. So I do think it's important this committee has this context for the work that it does in terms of understanding the overall finances of the combined authority. I think it informs our assessment of risk. It clearly informs our consideration of the annual report and accounts in due course. So this is the report that was presented at the June board, setting out the key features of the results or the draft unaudited results for financial year 24-25. Obviously, happy to take any questions. I think the two elements of this that caught my attention. First of all, actually, from the perspective of the revenue position, most things came in very much in line with budget, with the one positive exception being the very strong performance by the Treasury team in terms of managing the net debt and net investment position, and thus the generation of £29 million of net gains from Treasury activities. And then that has then been earmarked, as it's set out on page 23, with more than half of that under the heading of bolstering financial resilience. So I might come back to that a little bit later. The second part of this that I think probably just also I thought was worthy of note is that we are, as an authority, we are still struggling to achieve the budgeted level of capital expenditure in any particular year. And para 22.9 here summarises that last year we only spent 60% of the planned programme, and that reflects 69% for the WMCA delivered programme and 45% for the local authority in externally managed programmes. So this issue around capital spend continues to be one that I think the authority needs to be focused on, and I think it's something that, from a risk perspective, Peter, we should continue to be mindful of, and we'll pick that up later. So those are the two observations I would bring to the committee's attention. Any other questions? I'm sure Louise can answer. Councillor Lacker.
Just a comment, Chair, more than a question. I think it's probably in my grumble. It's 2.9 million, which is, I understand, is going to go to be in the general fund.
Yes.
The idea, I think, combined authority is a service authority which helps others to do things rather than building its own coffers. So I'm thinking is 3%. Fine, if that's the case. Why making them swell up? It should be going out to the public to do things rather than just keeping money here. So I'm just, I know whether Louise can give the understanding how much our general fund should be maximum, or we are just stacking up money somewhere else. Yeah.
Happy to, yes. Thank you, Councillor Lacker. So the recommended level of the general fund balance is round about 3 to 5%, and that's mentioned in the audit plan later on as well.
Sorry, is that from SIPA or from? I'm just trying to understand why is 3 to 5.
That is the general. Is it from the auditing standards Act? Sorry to put you on the spot there.
I don't have the answer to that.
No, I don't know. I don't actually know the answer.
I'm thinking, sorry, Chair, I'm just grumbling on it because the idea is the money should go to the people there somewhere. What it is all for to help the other authorities or to deliver the stuff rather than sitting here. So that's my issue behind it. That's why I'm saying this money should be more circulated somewhere rather than just in the balance sheet. Can I also endorse your second part as well, Chair? I think what my concern is, if the authority doesn't spend the way speed it does, we are in danger as an authority. The government say, well, you couldn't manage to spend, why give you more? So in future, we might be ending up not getting what we should be doing. So I'm just worried about that. It'll impact us economic development the whole life. So maybe we need to put that in order somewhere.
Just to add to that, it was one of the external audit recommendations last year and the previous year as part of the value for money assessment for the combined authority to increase the level of reserves because it was felt that it was below the recommended level, and therefore we didn't have as much financial resilience as other authorities, if that makes sense. So benchmarked against others, we were really low, and so we deliberately increase the level, if that makes sense.
And yeah, you're right. It'd be good to know what the source of the 3 to 5% is, but I can't believe it's going to be an auditing standard.
No.
I think it must be some SIPA regulation.
Maybe good idea.
Benchmarks. But we're not at that level. We're still below the 3%, which is therefore I don't think that it's that much. But I have a slight concern that people are saying, well, we should be between 3 to 5% to provide financial resilience when we're earmarking £16 million this year to bolster financial resilience. So, it seems a bit odd to complain about the level of the general reserve when the only reason it's not what it is because we've earmarked the reserves. So I will let you talk about that for when you present your findings later in the year. Okay. To your point on returning funds, I should have probably have mentioned that. There was a question at the board around the need to return the zebra grant funding. So that did get raised at the board, and it was explained that was because actually the plan for that grant changed fundamentally within the nature of the buses that were acquired, and therefore we didn't meet the conditions to retain the grant. Is that a fair representation?
Yeah, that's absolutely a fair representation. The scope of the scheme changed, which meant that the combined authority didn't qualify for the original level of funding offered.
Yeah,
I think Linda mentioned previously on this.
Yeah. Okay. Any other questions, Councillor Fitt?
Thank you, Chair. Just a quick question about the bus franchise reserve. So currently there's £38 million budget to help pay for the transitional and management costs. Is this creation of the £11 million reserves for this because we suspect that the costs of this transition are going to be higher than that 38 million? Just what's the need for this £11 million of reserve funding for this bus franchising resilience?
So this is para 2.13 in this report.
Yes.
24. Thank you.
It's not, in addition to the 38 million, it's part of the funding arrangements to support the 38 million. So it's not on top of that. But the further details will emerge as the franchising programme is developed. So these are the very early estimates, and it's effectively putting money aside to provide that resilience to fund the franchising scheme in the future.
And is that because we think the costs are going to increase by quite a lot, because that's 30% of that budget?
Not at this point. We've got no intel that tells us anything different. So it's a contribution to that 38 million rather than being on top of it. So okay. Does that help? Yeah.
Yeah, it does. Thank you.
Yeah.
Mr. Martin?
Well, excuse me if I've repeated anything, but it is a substantial
Will you press the button, Rose, please?
Sorry.
Thank you.
It is a substantial underspend, which is concerning because we're here to do projects across the West Midlands. And it does concern me. The government pays you grants. I understand that up front. And then due to the capital slippage, they have large balances to invest. And this has enabled 28.8 million or so to earmark for reserves. But surely we should be increasing the money we pay out to projects in the West Midlands. It seems like you're saving for a rainy day, and that concerns me. We're here to produce projects.
Yeah, do you want to comment on that?
Yeah, there's two elements to the Treasury gains in 24-25. One is that the interest rates were much higher than we were anticipating when we set the budget. And then the second part of it is indeed because we didn't spend in line with the original capital programme. So we've got extra cash, but it's still earmarked for expenditure on those schemes that it was originally planned for, if that makes sense. So there's two elements to that, those Treasury gains. One is the higher interest rates we saw during 24-25, and also the capital programme slippage that you mentioned. Does that answer your question?
Well, it sort of explains why we got the gains, and I think fully understand that. I suppose the question is, why are we continuing to get the slippage on these programmes? And I did make the point, there is more slippage in the schemes that are being managed by the constituent members than there is slippage on the schemes that are being managed by the combined authority. So this seems to be a collective responsibility for combined authority and all 7 members to understand what are we just setting too ambitious budgets? Are we setting budgets which are just too ambitious for our capacity to spend, or don't put in place sufficient contingency for delays? Or is there something else going on? And I suppose it may be too early because the ARAP review was only just last year, wasn't it? But 40% underspend again on the capital programme doesn't feel a good place to be. Councillor. Yeah, McCarthy.
Thank you. I understand the situation on the revenue underspend, but on the capital underspend, do we need to dig a little deeper on what the sector issues might be? It may be that there is an understanding that that isn't the problem, but if construction sector is unable to pick up on these opportunities, whether we still have supply issues, whether we should be spending more time and effort on developing skills in those sectors, I think would be useful to understand, even if it does involve doing some more work.
Sure. Just pick. Was Councillor Kettle? Did you want to raise a point?
I'll just make the point that my interpretation of what was happening, that we appear to be acting against ourselves. This money needs to go out quicker, so that and earlier in the year, so that our authorities can get on and use the money. And the idea that we are 40% underspending is, to me, counterproductive, and so we're acting against ourselves.
But I don't think it's that the money is not going out from here. It is that the spend is not happening on the projects, and therefore the money is not being drawn down. There's no block to any of the money going out. It's just the projects are not progressing at the pace that people are expecting them to. So there's no sense of money not being released. It's just people aren't spending it in line with the budget. And I say this may be a budgeting issue, but I don't know.
So you're saying that the allocations are going out early enough and quick enough, but it's just being expended out and drawn down fast enough elsewhere.
Yeah, all the money is earmarked. all the money is earmarked for specific projects. It's just the projects themselves aren't happening at the pace that the budget assumes. That's why I keep coming back to, and to some extent that's why this committee, there's a TDOS committee, there's a board, but this committee has a role over governance and financial monitoring, and from the perspective of we rely heavily on our budgets, don't we? And if the budgets are just not proving to be accurate, then we need to try and address that. Any other Councillor Jasper?
Thank you, Chair. Sticking with the capital underspend, I think given inflationary pressures and the level of underspending, have we done an assessment to see that these projects will still be within budget?
So it's subject to review continuously, the Combined Authorities Capital Programme. As the Chair mentioned, is it 45% is externally delivered?
Yeah.
So it's
only 45%.
Yeah, under continuous review throughout the year. But just a point to note that the final forecast of the year, so that's kind of what we were expecting to spend, because looking back, the original budget was set in early 2024. So the most recent forecast that was reported to the board in March showed a position that was 5% below the forecast. So the original budget was set at the higher level, and then the forecast we actually acknowledged throughout the year and got approval from the board that we weren't going to spend as much as we originally intended, and that's about getting payments made to contractors and other grant payments made, rather than not having the funding available, if that makes sense. Does that help?
Can I just make a point? And I think Karen made the good point on this. Issue is, once money is gone, it's individual authorities how they work with their projects. I can give my own example in Copy City Centre. The slightly delayed because there's a lots of legal issues and solicitors, how they dictate you what you want to do, and lot of stakeholders. Sometimes it becomes difficult to manage within the time. The issue is on the issue whether it's inflation is going to happen or whatever. The money is gone from this side. That's up to the individual authorities how they manage that within those processes. They might have to downsize if inflation is more. They have to work it, because if it's not started, so they have to work it. I think in defense, I think Karen made a very good point. We need to get underneath what's going on, why is there, rather than blaming us. We are not, this authority is not to be blamed. It's those people who are not delivering enough quickly, and they need to be seen what's holding back. That's the point.
Okay.
Sorry.
I think we should probably draw this to a conclusion now, but thank you for raising that point. You are right. You know, the two biggest areas of underspend, because I see this at the investment board meetings, are in Coventry, where there have been legal issues, and they're in Solihull, where there is all the delays around HS2, because a lot of the spend is linked to HS2 spend, because that hasn't happened. Solihull hasn't been able to spend some of the money it is. So there are lots of reasons why this is what it is. I say, if I have a concern, it's just why do we keep setting budgets which clearly are way beyond what we seem to be able to spend in any particular year, and that is probably realism in the budgeting, I think, would be my plea, to be honest. As well as all the stuff that goes on with Jyoti and SAF and the change control requests and all those other good things, which Matt may comment on a bit later. But if there's one thing around here, it's because this isn't a new feature. This is all 4 years I've been chairing this committee, but it hasn't got any better. Okay, shall we move on? But we note that report. Thank you for your contributions to that. To the extent you are back in your individual councils and you are aware of these issues, please make inquiries, because as I say, the numbers suggest the bigger issue is within the individual councils. Yeah. So thank you. Right. External audit plan. Zach, I ask you to talk us through this. You can assume we've read it, but pick out any particularly key points that you wish to make.
Okay.
Thank you.
So yes, this is our 24-25 audit plan. Covers the financial statements, audit, and the value for money work that we are required to do. Headlines are set out on page 13 of the report, which is 71 in the pack. I'll probably just stick to that page and just give you the headlines, and then happy to take questions. So significant risks we've identified for this year's audit are management override of controls. That's a presumed risk, and it applies to all audited bodies. It's basically the risk of fraud in the accounts. You're required to consider that to be a significant risk. The second one is around the pensions position, the pension fund position, and that's due to the number of assumptions in the valuation of that figure and how they are sensitive to change. We report the results of our work on significant risks in our audit findings report, which we're hoping to bring to you in November.
And we're hoping you will as well.
All goes well. We acknowledge that the combined authority is part of the group and prepares group accounts, and so we will test the preparation of these as well. Materiality, we've set as 12.4 million for the authority accounts and 12.6 million for the group, and that's the figure that we use to assess whether there's a material misstatement in the financial statements. So that's the key figure. One of the other key figures is clearly trivial. We call it clearly trivial. Below that level, which we've set at 0.62 million, £620,000. We don't report errors to this committee. So if they fall below that threshold, we don't report them. If they fall above it, then we will report them to you. Value for money wise, so value for money covers the three main areas, as there hasn't been changes to this approach in the year. So the financial sustainability, governance, and improving economy efficiency and effectiveness. And we didn't report any significant weaknesses last year, so a good starting point for this year. We did report some improvement recommendations in the previous years. We will be following up on those during the course of our audit. Logistics wise, our planning visit has taken place. This audit plan is the result of that. We received the draft accounts now at the end of June, so we're now starting with our final accounts work. As I said, that should go through to October, with close down then in November and reporting to you at the November meeting. And just to confirm to you that we've done our independence assessment and we remain independent, so we're happy with that. So that's the headlines, but I'm happy to take questions. Thank you.
Okay, thank you. I was just going to make 2 or 3 quick observations and then open it up for any other questions. Page 4 of your report, which is 62 in the pack, you reference the update with regard to English devolution. I understand the paper got issued on Friday, didn't it? Oh, thank you. Sorry, the paper got issued on Friday. For the next meeting, can we have, and I mean a summary, just of the key issues, because it, as has been described, it's the biggest shake-up in local government for 50 years. So I think it'd be useful just for us to have a degree of oversight of what that is, albeit the time for implementation. Who knows? But if so, somebody could just give us a quick summary on that, that'd be great. Lease accounting, you do reference in here. I think I'm right in saying, for some of you, this may be a big issue in your local authority accounts. Here, it's not a big issue. 6 million, is it? Something like that, right of use asset and liability. So this is huge for the sector, but it's not particularly significant for this particular authority. So that's a relief. And then the last thing I was going to say on pensions, I don't know if those who were on the committee last year may remember the way that pension assets and liabilities have moved. Our share of the combined authority of the West Midlands pension scheme is now a huge asset. So we have over 100 million of net asset. Now, we're not allowed to recognise that under the current rules. So whilst it is a subjective number and the numbers are big, it doesn't actually feature in our accounts because we're not allowed to recognise that asset, which is a bit of a shame. If you wanted to lobby on if you want on how to get access to pension scheme surpluses, that's a whole different issue. But so to your point, it is a big number, but it's not actually impacting on the balance sheet of the combined authority, sadly. So that was all I had to observe. But other than that, as I say, the backstop date is February again.
The end of February.
End of February.
Yeah.
We don't want to be anywhere near that. So, please could you let me or my successor know if at any point in time there looks like there might be any slippage from that November date.
Yes.
I know we were in the top 10% last year and we'd like to be the same again this year. Any other questions for Zach or for Grant Thornton on their proposed plan? Everybody comfortable with the proposal in terms of the work? I should also say the fees are not set by us. They are agreed at a national level with PSAA. So for those of you who are observing a 6% increase in the fee, that is not something that has been negotiated here. That is something that is negotiated on our behalf.
I was just going to say if Louisiana had input into it on the first place.
That is also another matter that will become subject to other things, but I'll move on. Right, any other questions? Everybody happy with the plan in terms of the proposal, the proposed approach? Thank you very much. And I think so. I have to sign that off. Thank you. Right, internal audit plan.
Thank you, Chair. So the accounting audit regulations require that the organisation ensures that it provides adequate and effective internal audit in respect of its accounting records and systems of internal control. It also requires that we conduct an annual review of the effectiveness of these. These arrangements must also be delivered in accordance with local internal audit standards, which were updated at the start of this year, and also within the application note for the local internal audit standards for the UK public sector. This internal audit plan provides the combined authority with a risk-based internal audit plan for 25-26 and is based upon internal audit's assessment of assurance needs used to direct internal audit resources to the aspects of the organisation which we have assessed as generating the greatest risk to the achievement of the aims and objectives. A review of the resourcing arrangements for the internal audit function has been undertaken as part of this annual audit planning process, and the review considered the audit activity completed during the 24-25 internal audit financial year and the required assurance needs in 2025-26. The plan has been aligned with the available internal audit resources to ensure effective delivery of the risk-based internal audit programme, and this alignment supports the production of an annual internal audit opinion, which will contribute to the preparation of the annual governance statement. The aim of this document is to provide an overview and an indicative scope of audits to be covered during this financial year. The plan is a statement of intent and has been developed to allow sufficient flexibility to respond to changes in the organisational risk environment and the resources of the internal audit function. It will continue to be reviewed throughout the year to ensure that its continued relevance, both in terms of supporting the combined authority's aims and objectives and in providing assurance over emerging risks. Resource requirements have been taken into account and reviewed as part of the planning process, and they include audit management, reactive audit requests, and also whistleblowing and complaint investigatory work. The internal audit resource is deemed sufficient at this moment in time to enable the function to deliver the risk-based internal audit plan and to produce an annual audit opinion. Any major revisions will be reported to the future meetings of this committee. I don't propose to go through every single audit within the plan, but I'm happy to take any questions.
Thank you very much. It's an important opportunity. Internal audit is a really key part of the resource that we have in terms of assurance. And so this is a really important part of what we do as a committee. Can I just commend you again? This is, again, taking another step forward from where we have been historically in terms of how the plan has come together and the fact you've actually got a team to deliver it, which is also good progress. Have you filled the vacancy or? We have. Yeah, brilliant. Okay. So, I very much commend the process. In terms of the specifics, again, it seemed to me that it was pretty well aligned with the big issues that we've been talking about. I noticed you have capital reviews in there as a specific area that you're going to be focused on, going back to a point we discussed earlier. So my only, and you've also got independent training providers, which is again a topic that's come to this committee on more than one occasion in the last 12 months. So thank you for that. So the only thing that I thought that didn't seem to be covered was anything to do with housing.
Yeah, so there are a couple of reasons for that. We have an integrated assurance function within the organisation. So that is effectively a third line of independent assurance through internal audit, which is reported to this committee. We also have a second line management assurance function in project assurance and appraisal. There had previously been in 24-25 2 external audit reviews in housing, which we have taken assurance from for the risk-based process within this year's audit plan. And also there is a second line health check, is what they are called at the project assurance and appraisal level, review into housing as well, which I believe is ongoing. So that's the reason why we haven't felt the need to provide additional assurance on top of those external reviews, which were completely independent, and also a second line management assurance review.
Sorry, remind me, are we aware of those external reviews and what if anything, they reported?
I don't believe it has come to this committee now.
Okay. Do you think it would be possible, just again for the next meeting, if you could just give us a brief summary of what those reviews were? Because obviously it's a strategic objective for the mayor, and it's again, I'm aware from discussions in other committees, progressing some of those housing schemes has been problematic, shall we say. Okay. Right, open it up for other questions, comments, queries from other members of the committee. And so this is pretty important stuff, because this is a lot of what we get as a committee in terms of assurance. So any particular question?
I'm glad it's actually the issue of the skilled fund. The skills fund. Because remember, that's where we have difficulty previously somewhere. I'm very glad that it's there. Thank you very much. Yeah.
Any other questions or comments from members of the committee, or are you comfortable to approve this plan? Yes. That's a ringing endorsement. Thank you very much indeed. Cheers. Thank you, Councillor. Right, which brings us on to now we're going back. Now we're going back to look at the report for last year, completion of the report for last year. So again, hand over to you.
Thank you. So the purpose of this second report is to present the committee with an update on the work completed by internal audit since the previous update in April 2025 and progress made against delivery of the prior year's plan. So during the period of this update, audit work has consisted of the progression of the remaining 2024-25 audits alongside reactive and counter-fraud investigation work. The internal audit team has further continued its work on key corporate projects, providing a project support consultancy role and advising on the implementation of application of internal control. During the reporting period, 5 audits and 1 counter fraud review were completed to final report status, with an additional audit report issued in draft and 2 grant verifications completed. The internal audit team remain on track to deliver the revised 2024-25 internal audit plan with the outturn at the September meeting of this committee. A total of 20 audits have been initiated under the revised internal audit plan. That includes 1 follow-up review and 1 counter fraud investigation. And as of the 14th of July, 14 have been fully completed. 1 audit has been issued in draft form and 5 audits are in advanced stages of completion. The table at page 123 provides an overview summary of the audits completed, including the level of assurance provided and the recommendation statuses as well. I'll give a brief summary of each of the audits that are presented to this meeting of the committee. So first we have change control. So a review of change control has been carried out to provide assurance that effective procedures are in place for the assessment of change requests, including forward planning, approval in compliance with the Constitution, and the appropriate reporting of decisions being made. An overall opinion of reasonable assurance was provided, with 4 medium and 1 low-level recommendations being identified where improvements could be made and for action by the department. The second audit was cyber essentials. This review was carried out to provide assurance and as an internal readiness check in preparation for the Combined Authorities submission to acquire the cyber essentials certification for 2025. An overall opinion of limited assurance was provided, with 3 high and 2 medium level recommendations being identified where improvements could be made. It is important to note that since that report was issued and before the meeting of this committee, the certification has been approved by the awarding body, and those revisions were made, which were identified within the internal audit report, so they have been made quite quickly. The third audit was payroll. A review of payroll, so this is one of the key financial systems, was undertaken to provide assurance that the systems relating to payroll were operating effectively and ascertaining the degree of compliance with the Combined Authorities financial regulations and Constitution. An overall opinion of substantial assurance was provided, with 2 medium and 2 low-level recommendations. The fourth audit was the annual business plan performance reporting. This was to provide assurance over the annual business plan and the reporting of performance against that throughout the year. An overall opinion of substantial assurance was provided, with only 1 advisory recommendation being identified where improvements could be made. And finally, the accounts payable audit. A review of the key financial systems accounts payable audit was carried out. An overall opinion of reasonable assurance was provided, with 6 medium and 1 low-level recommendations being made and 1 advisory recommendation. There was finally a counter-fraud audit initiated during this period. That was in relation to scratch travel card tickets. And we conducted a review due to identification of a lack of controls in relation to access, reconciliation and segregation of duties and management of this scratch card ticket process. Finally, we have recommendation tracking at section 4 of the report. The table provides a summary as of the 31st of May 2025 in relation to the ongoing recommendations and those which are outstanding. We have outstanding recommendations in relation to accounts receivable, NFI, Longbridge Park and Ride, and also readiness for the Procurement Act 2023. So I'm happy to take any questions on any of the audits themselves, bearing in mind this is in the public part of the report, and also on any of the recommendations.
Yeah, thank you. And so we get an opportunity to come back to this in private session at the end if you've got any detailed questions about any of the recommendations. So
just a couple of questions.
Yeah.
I've got some on cyber, but
You'll pick those up in the private session.
On page 128, you've mentioned debt recovery, and you're currently a draft debt recovery policy is being developed or has been developed. And then underneath you talk about write-offs of debt. I'm just wondering, this committee is responsible to ensure good governance and look at procedures. I'm just wondering if that will be brought before this committee on the proposals.
So will you pick this up when you issue your final report for accounts receivable this year?
Yes, so we have conducted a review of accounts receivable, which includes this recommendation and the review of this recommendation for the current year. So that we've provided an update in terms of the draft debt recovery policy, which is currently at late stages of revision and will then go for approval. Yes.
Thank you. The other part is I'm glad to say that the Longbridge Park and Ride is coming to the committee on August the 25th. So thank you on that.
I would love that to have been concluded before I step away from this, this position, because it was one of the very first things we ever looked at, I think. So that'd be great. Just on change control, I'm aware from my engagement with the investment board that there's been a real focus on change control requests coming through the investment board. So I don't know whether I think it would be hopefully reassuring to investment board for them to be aware that this review has been undertaken. So I know when you did a previous report, Ian Martin at investment board referenced it. I think it would be sensible if something similar happened with regard to this one, if that's okay. You've answered my question on cyber essentials. Thank you. The other question I'll pick up in private session. So anything anybody wishes to raise at this stage with regard to this report? Sorry, Matt, I should have just said, would you anticipate all of these reports will be complete by the September meeting? Yeah. Good. Any other questions at this stage in terms of the plan, in terms of the completion of last year's plan? No? Well, thank you again. You know, I'm sure you will point out that 9 months ago I was slightly concerned as to your ability to complete everything that was in the plan, and delighted that you've been able to achieve most of that during the current year. So thank you for that. So we'll come back to it in private session at the end. Right. So I think we simply note, everybody comfortable to note the report. Very good. Right. Where do we go now? Yeah. Yeah, the annual review letter. Helen, this is very exciting.
Yeah, thank you. It's very exciting, but it's kind of not very helpful. So
That's why it's exciting.
it's a summary of complaint statistics from the local government and social care ombudsman for the year ending 31st of March 2025. And I think this is a standard letter because it says it offers valuable insight into your organisation's approach to complaints and wants us to consider it as part of our corporate governance process. But when you actually look at the information that's provided about us, in the year to March 2025, they dealt with 7 complaints. 5 were not for us or not ready for us to investigate. We assessed and closed 2 complaints and investigated 0 complaints. And because they didn't investigate anything, they don't actually give us any detail. So I have no idea what those 7 complaints were. So I could guess at some of the people who've been troublesome through the year who might have complained. But I can't share anything with you because we just don't know what those complaints were. So not very satisfactory at all, really.
Well, first of all, thank you for sharing it. I don't think this committee has seen this letter in previous years, so thank you. It's the first time we've received the letter, so thank you. Oh, unless it is the first time they've been issued.
I don't think it is, but I was just about to say, but actually it's good news because there's been nothing that has been investigated or upheld. I should have made that point clear.
Yes, so I say thank you for sharing with it. Thank you for the fact that there is nothing for them to report. I think, but anyway, open it up.
Do you have a complaints department? Presume you do.
We do. The complaints are mainly dealt with through petrol transport side of things, but they deal with. Sorry. Yes, we do have a complaints department that is. It's mainly transport because that's where most of the complaints come from. So it's our biggest department, but they deal with everything. And then stage 2 complaints come to Matthew's department to be investigated.
The transport department would transfer any to your department or not?
The complaints team would deal with the first stage of the complaint, and then if the complainant's not satisfied, they will come through from the stage.
Right, we have an ombudsman report coming to the standards board with social care and children's services and other complaints and list all the departments that.
Yeah.
And we found listening to the complaints and acting on them.
Yeah.
Instead of just saying, oh, someone's complained, we don't need to bother about it. But I would have thought that transport would have passed on the complaints to your,
Well, I suppose a complaint can be everything from the most minute issue about a train being late or something like that to obviously much more substantial stuff. And the more substantial stuff and anything that constituted whistleblowing would clearly come through to Matthew's team. Is that right?
Yeah.
Yes, I suspect the report you're referring to, Councillor Martin, is probably your council's equivalent of this. But I would expect in a council that's dealing with social care and so on, you would get many more complaints and referral through to the ombudsman. That tends to be the area that is ripe for complaints to the ombudsman. So this is not about our complaints generally, it's about the complaints that have been made to the ombudsman.
That's right.
Thanks. Yeah, I think in my position at Coventry, we get regular reports on every year from ombudsman because that's lots of issue. But here, the issue is for us, what's the procedure, how you deal with it? I think I never saw that procedure coming to us. It's a good idea if there's a one sheet giving us the understanding how this is being done. Thank you.
So we have a corporate complaints policy and procedure that is available on the website for the organisation. That is 2 stages to that policy. The initial complaint will be made to customer services through a portal. They will pick up that complaint, they will triage the complaint, carry out an investigation, the customer services team will, and provide an outcome as a stage 1 outcome. The complainant then has 2 choices. They can accept the whatever the outcome was, or they can, if they would still like to forward that complaint, they can make a stage 2 request. That stage 2 request comes through to internal audit as an independent review. We conduct our review and provide a final outcome from an internal perspective. If they remain dissatisfied at that point in time, they can of course contact the ombudsman, who can then look at that.
That actually raises a further question, because your department is new still in this area, because it was outsourced before,
Yes.
right? So how did we deal then? I think I'm just trying to understand what's the procedure here, even if that's the procedure is on the website. Was it approved by the board? I'm just trying to understand who approved it and where was the information on it.
To be approved, we can post on joint, but prior to the internal audit team picking up stage 2 complaints, they were picked up by the legal team.
And Lorraine used to report through to this committee, so it has come through to this committee.
Thank you, Chair. I'm not 100% signed up to the idea that a complaint is a gift. Only about 99%, because right across local government, there is the issue of, is that complaint actually just a service request? But broadly, we learn from complaints. So it's disappointing they don't give us a bit more detail. I guess when they say 5 were not for us or not ready for us to investigate, to the complainant, they've sent them back to the combined authority because they hadn't been through that process first. Would that be a fair assumption? And would it, given the low numbers, be appropriate for us to feed back that it would be helpful to get more information?
I would imagine that they have told the complainant either to come back to the combined authority, or it may be something completely random that we're not responsible for example, like they might be complaining about a train not running and it's something that we're not responsible for. I think we have investigated whether they're prepared to give us more information, and the answer has been no. But we can double check.
Yeah, it's tricky, isn't it? Because I understand it has to be anonymous, and that has to be respected. But as a consequence, I agree with you. Yeah, you know, at one level, complaints are helpful if they're valid, and that they identify areas where we can improve. But if you don't know what they are, it's a bit hard.
How can they refuse to give us the information?
Helen, do you want to?
My understanding is that the complaints are anonymous at this stage unless they, I mean, if they come back to us and it's something that they've investigated and we have to deal with, then we would obviously have that information. But the things that have gone to the ombudsman that haven't then been shared with us at this. They're saying that they're not complaints that have accepted as an investigation.
Who took that decision? Who's they?
It's the ombudsman.
Oh, it's come back from the ombudsman itself. Okay, thank you.
Yeah, can I suggest we should have a procedure once coming to either the board or audit committee for approval, what's going on, what the stages go, and not necessarily how, then annual report. The anonymous, yes, somebody would have still looked at it, maybe anonymous. You just can't throw in the bin because there may be genuine issue behind it. Those they be probably dealt with by somebody who are relevant or close to relevant, rather, with some independence. But it's the issue of procedure, how we deal with it. I think that should be, we should understand what we're doing on these.
I think we did receive that report at the last meeting or the meeting before, but I'm very happy for that to be summarised for us. But when you're talking about a third party of an ombudsman, we don't have a control as to what they deal with, how they respond to a complaint. In fact, we don't even know that until we got this letter. I presume we didn't even know that there were 7 complaints that had been made. So we don't know anything further. But you know, that's the flip side to having an anonymous, independent reporting process, isn't it? I suppose. But it's a bit frustrating because you get this, you say, well, there were 7 complaints, but we don't know what they were, and we don't know why they weren't, why it was concluded they didn't need to be followed up. But equally, that's the way these sort of bodies work, isn't it? But in terms of our own internal processes, yeah, I think it's reasonably well established, but we can very much summarise that. And we did get a summary from Lorraine. Was it last meeting or the meeting before, actually, wasn't it? In terms of whistleblowing matters that had come through. Okay. Well, it did cause more excitement than I thought. Sorry. Any other questions on this particular? Sorry, thank you for sharing with it. Thank you for sharing it with us. Yeah, let's just see if there's anything further we can do in terms of reflecting on that. Okay. Right, strategic risk update. Peter.
Thank you very much. This is a very different update to that which you would normally receive. And it reflects the conversations that the executive board have been having around their wish to thoroughly review the strategic risk register and to look again at what their sort of high level sort of concerns and major sort of broad strategic concerns are. It also reiterates this idea around enterprise risk management, which I think I mentioned previously as well, which was that they would have that sort of view of those high level strategic concerns, but beneath that, the sort of the delivery risks were for the sort of directorates to take sort of ownership of and to provide sort of confidence or to potentially raise the strategic themes that could then sort of come up. And similarly on the operational side, that sort of governance activity, governance panels, etc., would be able to provide some assurance and challenge around more sort of operational sort of risks. So that was the sort of the setting for that sort of discussion, where they then sort of spoke about in May what those sort of concerns were. This was not an opportunity to try and sort of complete a risk register. We weren't trying to do the whole cause effect. What are we doing about it? Controls. and then do a full sort of impact likelihood assessment. It was to get them to try and express what they were sort of concerned about and what we could then sort of go away and explore and try and put some sort of flesh on those bones sort of thing. So those are the bullet points that you've got in front of you. They're the sorts of broad things that they've asked us to sort of look at, try and develop into potentially a number of new risks within a strategic risk register. I'm having those conversations at the moment. I've got a workshop coming up where we're going to sort of try and brainstorm some of that as well, and explore what sort of perhaps evidence we've got and what those controls are, etc., so that we can develop that. The plan of action is that I'll be taking something back to the executive board in August, when they will have another look and hopefully sign that off as their new strategic risk register. And all being well, that will mean I'll be able to come to this committee in September with a new strategic risk register. That's something more akin to a new quarterly update.
Thank you. Yeah, understand this is happening. Understand. Yeah, we've got to go through it in a detailed and proper fashion. But obviously, we would encourage this. This is important stuff, and therefore we would encourage that it's addressed as quickly as possible and reset. That's my first point. The second point is the points that are set out there. Sort of, they feel like they're quite a lot of external factors, and it may be that what you're saying there is those are the headings under which you will think. But I'm a great one for you have to control what you can control, and being aware that the world is a dangerous place, and we clearly need to think about what the implications are for us as an organisation of some of these issues. So, for example, climate change, adaptability. So I would just encourage you to be making sure that when we think about it, we're thinking about it in the context of the risk has the impact on us as an authority and what we can do about them. And I suppose, so for example, and going back to the final point we were discussing earlier about our concerns around the capital programme and its delivery on time, on budget. Programme and delivery, simply to say climate change and alignment between activity, resources and the public will. Sounds like a very broad topic, but I'd just make those observations. You don't feel you need to respond at this stage, but you would.
No, I can. I mean, I think that some of the conversation was slightly sort of esoteric at times, but it's quite sort of, I think it's really quite helpful to sort of understand, that they are the ones trying to run this organisation. What is it that's perhaps when they're looking forward really causing them concerns, and it deliberately wasn't trying to sort of capture all of those sort of delivery and operational issues. I would like to think that as enterprise risk management properly sort of beds in, those things can start to bubble up and emerge anyway from that position, and then join the more those broader strategic sort of concerns. So let's get this working. Let's start to draw up those things, understand sort of any sort of thematic concerns, and then start to bring those up. But in terms of that, so climate change adaptability was an interesting one purely because it's not about what can we do about climate change, but actually if it's real now, how does that affect the services and the functions that we offer, and how are we adapting to it? So that is one that's actually then within our control. Some of those others, I agree, may not be within our control, but you'll be aware of sort of the four T's of risk management. So it's not a bad thing to at least have that conversation, at least put it down and say, does that then mean we're going to tolerate this? And if we're going to tolerate it, then that's fine. We've gone through the process of understanding it and saying we're going to tolerate it. So I'm not for 1 second saying that list of bullet points will all evolve into actual risks in the risk register. It's a process we're going to go through to try and develop some useful lines as a new starting point for that risk register. I hope
that's great, and I agree. Just don't stop at the esoteric. Right, further question, Councillor Martin.
I was just, as we were speaking earlier about the underspend, not delivering on projects and that, and how you feel about the risk of not achieving our strategy.
So I think a lot of this and a lot of the sort of the transformation program that we're sort of going through as well, and some of these risks sort of reflect that also, is about making sure that we're clear around how we align our activity with some of those sort of broad outcomes, with the sort of mayoral ambitions, with our integrated settlement ambitions, etc. So I think there's even more of a focus on that. I'm certainly aware of the underspend. I've spoken to other colleagues about this. I talked to my colleague who produces the annual business plan, sort of quarterly performance report as well. So we're constantly trying to make sure that we sort of cross-reference these things and sort of keep attention on where there are sort of some of those concerns. And I will continue to do so. So I think there's an opportunity here for us to make sure that we start to plug in some of those delivery concerns with these strategic risks. That wasn't the aim of that conversation, but we will certainly look to do that. And I've reminded myself again that this is something that you're clearly agitated by, so, and understandably so.
I mean, I think sometimes we tend to just let them assess themselves, and we've actually got to go out there and tick the box and make sure that it's going according to plan rather than self-assessment.
That's okay.
I think that's an issue of progress rather than KPI, key performance indicators that can be picked up. I just actually, it's very good headings, very nice. And the only thing I want to understand is the implications where specifically procurement and no not applicable things rather. I think these things can be applicable anywhere when you have a risk issue. So I'm just thinking either just discarded or equality implications and so on. Just I'm trying to understand that section. If that means it will not have an impact on those things, or is it just at the moment a blank columns?
So I kept that blank because this specific process of them being the executive board, sort of going through that process of trying to put down what their main concerns were, I didn't believe sort of had any implications there. What is absolutely true is that any of the strategic risks, if we start to explore those, could have implications across lots of those things. But I would expect that to be sort of highlighted as we develop sort of papers in response to a particular risk. So if we have a very specific risk and we need to develop some control activity, those papers really do then need to understand what those various implications are. But the process of going through and just sort of working out what our concerns are doesn't.
Thank you. Thanks.
Any other questions for Peter at this stage? Thank you for coming along. Thank you for presenting the paper. Obviously, very much a holding paper. It's explaining where the process is and where you've got to. And I think my final concluding comment is, yes, please keep up the momentum behind this, because it's important the organisation has this, particularly as it goes into this next phase with integrated settlement and everything else, and with the changing external framework as well. Okay, any other questions?
Yes, I look forward to seeing the September report. Thank you.
Very good, thank you. We will note that report. Jyoti, thank you for joining us on screen.
Thank you. Morning, everybody.
Good morning. Obviously, this is your final report for the last financial year, so over to you.
Thank you. Morning, everybody. So you'll be familiar with the report format of the assurance update. So section 1.1 to 1.3 in the report provides a summary of the paper. And just to reiterate, as the chair mentioned, this report covers the reporting period January to April 2025. The body of the report continues to provide that independent analysis of the assurance information data, which underpins the opinions which are shared at the end of the report. So section 1.115 provides a summary of all the analysis that is shared in the body of the report. And this provides the assurance to the executive. So the executive board receives monthly updates for each month, and this is rolled up as a quarter view for the Audit, Risk and Assurance Committee for this reporting period. So the key summary is provided in that section. I suppose one point to slightly elaborate on in that section of 9.115 is point C, which is probably the most concerning of the key information shared, which summarises that there was a 300% increase between Q3 and Q4 in relation to change request activity. And I know you've questioned me previously about change request and the rate of increases. Just to provide some assurance, so although it is a substantial increase between those two quarters, that has actually been driven by some proactiveness as well. So again, to elaborate, 8 of the 24, so a third of those change requests were actually driven by preparation for integrated assessment. So it's actually a positive statement. So where we have got the single assurance framework embedded, where we do have programme business cases which have been in place and established for mobilisation of programmes previously, the change request process was utilised to provide that proportionate and flexible approach permissibly to mobilise those new projects in the integrated first year settlement much more speedily. So where we had approved programmes, the change request process was utilised to enable progression of that 1 year extension. So that's a positive statement. 8 of those change requests, again, were actually related to the investment programme. So I think comments have been made previously in that investment board had been chasing a number of change requests for some time. So actually they came through to fruition in this reporting period. So that also contributes to that increase. And therefore that leaves about a third of change requests which were not normal but operational BAU activity. So again, if you look at section, the table in 9.1 earlier in the report, those change requests are more in line with rough average of change requests that we've been receiving for the other reporting periods in the previous year. So although the 300% is alarming, it's a 300% increase for those for that particular period. Most of it is because of those external factors related to integrated assessment and the investment programme. The remaining third is more in line with the average that we've received throughout the year. And just listening to some of the comments that were raised as part of the risk management discussion, just to provide assurance that as we prepare for the multi-year preparations for integrated assessment as well, the single assurance framework is central to those controls that we're discussing with MHCLG in terms of the organisations, the CA's response to how we will operate going forward, to greater devolve funding for the delivery of programmes and projects. And the single assurance framework, an extension of our performance and evaluation arrangements, will all add together and contribute to that sum of how it all comes together and how we are performing and how we're providing that confidence of delivery to MHCLG and Treasury as well, and how it contributes to the outcomes framework. So I think the work undertaken today to date with embedding the single assurance framework has definitely contributed to us being better prepared and providing confidence to central government for the receipt of multi-year funding. Any questions?
Yeah, thank you very much. Yeah, I sort of looked at the point on change requests, you know, as you say. One, I was delighted to see it because I know how frustrating it has been for the investment board. But I think I'm right in saying obviously there was an internal audit report done on that. One of the issues with those change requests is that they were too slow coming through, and they're coming through after deadlines have been passed, and therefore this was playing catch up. So it's good that they have been caught up. It's not good that they had to be caught up, if you follow my gist. And monitoring those going forward, I hope and I'm confident that the investment board will continue to apply pressure there, because they're still not there yet, but they're a lot better than they were at the start of the year, so that's fine. My only other question, well, observation really, was 9.18. Obviously, you don't give us the detail of the programs, but I was slightly concerned by the status of program 3 in your health check, in that wasn't a single green and quite a lot of amber and even a dark amber. I suppose the only question is, do we think we're doing enough health checks? If when we do them, they seem to be highlighting a number of concerns.
I think going forward, the health checks are going to be much more important in providing that overall confidence to the executive board, the assurance that's needed. So the journey that we have been on in combined authority for the last 4 years with the programme assurance and appraisal team in particular, is that we have seen an increase of programme activity, and those existing programmes, such as the investment programme, was in delivery, but we're seeing many more programmes in delivery. And so this is the confidence that the health check programme provides. So this will be the first year, the coming year will be the first year that we would have tipped that we'll have more programmes in delivery than we have in the inception mobilisation stages. So the health check programme for this year has been approved by the executive. We have increased the number of health check programmes included in there. It is a key observation in terms of the information captured. The assurance specialists that undertake the health check reviews as well are trained to the same level as they are in HMT and Treasury as well, in terms of programme management and appraisal best practices. So the reviews are actually undertaken by those practitioners. The observations are shared with the senior responsible owner, and they're about improving or enhancing the delivery confidence of those particular programs. So it's a risk mitigation tool undertaking the health checks. So it is a key observation that I have shared with the executive, that there's an option going forward whether we actually increase our health check programs further, because we're going to have more programs in delivery. So they are providing value, and I think there will be greater value moving forward. Just one additional confidence that's been provided to the executive as an ask of the of central government through MHCLG, is that each of the programs which are being delivered through integrated assessment funding for year 1 will all have a health check review undertaken by the PAA team. So all of those programs are captured as part of have been prioritised as part of the health check programme moving forward.
Sounds like you and I are in violent agreement then, Jyoti, about their importance and increasing importance going forward. And and if as you're doing these health checks, you continue to find quite significant number of recommendations, then we should reflect on how much we are doing. And but no, thank you. Open up for questions. Councillor Martin.
Thank you, Chair. Can I ask you about 9.1 14 on page 212? It states that the data also demonstrates that the number of business cases received, 7 of the expected 43, 16%, indicating that project planning in some areas is less mature. Can you tell me when you do your reports on the business case and send back your reports, is there any improvements that can be done to improve the standard of business cases that we're receiving?
Yeah, so thank you. We're doing quite a lot of work in terms of trying to improve the overall maturity of the business cases. So the overall trend is demonstrating that business case maturity has increased. So the report that the Audit Risk and Assurance Committee receive is a wrap-up of a quarterly review. What we do with the executive is to provide monthly updates, but what we do with each directorate is have much more detailed analysis shared with them in a more timely basis as well. So that continues, there's a greater opportunity for that continuous improvement to feed in a much more timely basis. We have received a positive response to the recommendations, and wherever possible, where there's thematical themes which are emerging, we're working with the wider enabling services to address those. So plugging in that support with the delivery directorates. Having said that, so I've seen that proactiveness with the delivery directorates, but again, maybe to one of the points that Peter raised as part of the risk review, the way that funding has been devolved to the combined authority in the past has been a number of external factors. So some of that opportunity to better plan and to provide greater in-depth maturity of business cases is sometimes impacted by the timing of how funding is devolved to the combined authority. So if there's tight timelines or pressures to respond to government in specific timelines, that impacts the ability that they have to design and develop their program. So I would respond as yes, wherever it's within our control and they're able to, and we're working much more closely with the delivery director to support that improvement. And we have seen improving trends, but recognizing that there are still those external factors that we have less control over the mitigations that we have in place.
Thank you.
Thank you. Any other questions for Jyoti on this final report? Again, it's an important part of the assurance framework here, and it's recognised so externally. So thanks, Jyoti.
Thank you, everybody.
Thank you. Which brings us on to, so we note that report, which brings us on to the Treasury Management Outturn Report for 24-25. Your ears were probably burning earlier, Mr. Finnegan, when we were talking about contribution you've made to the results for the year. But I'd like to just flag any particular points from the report in item 18. Thank you.
Thank you, Chair, and good morning to the committee. So for this morning then, ARAC is asked to note the annual or stewardship report for Treasury Management for financial year 24-25. The report's been prepared in accordance with SIPFA's Code of Practice in Treasury Management in the public sector. And within the code, the recommendation is that the authority should provide the appropriate body to scrutinise Treasury Management activities, and for the combined authority, that body is ARAC. In summary then, the net position for the year was that net borrowing decreased, or to flip it on its head, net investments increased by 36.44 million. The change was contributed by two factors: one, the repayment of debt in the year, and secondly, net receipts of government grant. Speaking more widely though, I'm sort of referring to the budgeting question that came earlier in the committee agenda today. When preparing our cash flow forecast for 24-25, we would have actually expected those balances to fall reasonably significantly, and as a consequence of capital slippage, they've actually risen. No borrowing activity was undertaken in year. I've included the borrowing restructure that we'd previously alluded to in the mid-year report, whereby we had the opportunity to restructure our loan with Phoenix Group to lower the interest rate on the loan, but bring in the term of the maturity. The interest cost for the wider portfolio of the year was £16 million, which is at an average cost of 2.7%. From an investment perspective, we made returns as you noted earlier, £1 million, so 29 million pounds in excess of budget at an average rate of 5.2%. Outside of those key factors, then I can just report that all treasury management indicators were met during the course of the year, and happy to take questions.
Thank you. I'd say we touched on one or two things here earlier. Obviously, it is clearly at one level, it's very welcome that these activities have contributed this net 30 million over budget for the year. So we should obviously commend that. But as we've also flagged, at one level, it's slightly disappointing that you had so much money to invest. But a couple of questions from me. In 2.16, it says this shows it is expected there will be a need to fund projects from borrowing up to 173 million in 25-26. So can you just explain what you mean by that? Because you've said there were no new borrowings.
Yes, I'm sorry, there's probably the language needs more explanation there. So what we were reporting is obviously a projected increase in our capital financing requirement, so expenditure that would be funded by borrowing. However, as we've outlined elsewhere in the report, we probably, in fact, our central case is not to actually take on external debt during the next couple of years or so, but to fund that via internal borrowing using those cash resources that we have at this moment in time to subsidise that.
No problem. 2.24, there's a reference to CCLA. Obviously, I'm aware that it was announced last week, wasn't it, that CCLA are being acquired by Jupiter. Does that cause us any issues?
CCLA tomorrow, and I can report back afterwards. We don't envisage any issues. Certainly from the communications we've received from CCLA, it's business as usual. But I'll be taking that forward with them with our usual monitoring meeting, fund monitoring meeting tomorrow.
Okay. Yeah, I've seen that Jupiter have said they will continue to adopt the same approach and philosophy. So, but they often say that. And just the last thing that I noted in Appendix A is that we seem to have advanced to 10, 15, 25 million to Walsall MBC, all for, well, either 2 or 3 years. Is that that is consistent, allowable under the policy, not the Walsall element, the 3 years element. That is allowable under the policy, is it?
It is, yes. So we allow for up to £25 million in long-term investments. However, what we also, and it's not noted there, and perhaps we should have asterisked it, the CA has the option to recall that money at yearly intervals. So we retain the option to recall.
Okay, that makes sense. Yeah. Okay.
And as part of our wider strategy for last year was to look for longer-term investments in the projected environment of interest rates falling over the next 12 to 18 months or so.
I understand that, and yes, seems to make sense. So the 1 year option is only at our.
It is, yes. Yeah.
Good. Okay, and just to prove I'm not picking on Walsall, I noticed there was a 2 year 10 million loan to Manchester City Council as well. So, and
yeah, same type of structure, Chair.
And 5 million to Yorkshire Housing. So there you go. I don't want to be accused of picking on Walsall. Okay, thank you. Open up for any other questions from and any other members of the committee. People happy, comfortable to know?
I think it's well managed. Thank you.
Hopefully you heard that. That was a.
I did. Yes. Thank you very much.
No, thank you. As I say, it's you are managing what you are being provided with in a way that is obviously making a good contribution to the command authority. So thank you.
Thank you, Chair.
And with a risk profile which is clearly you're borrowing long and cheap, and you're investing short and at a better rate. So albeit taking advantage of those opportunities for slightly extending that, should it be needed. But the point around budgeting cash flow comes back again, doesn't it? Okay, thank you. Okay, we'll note that report. Thanks, Mark.
Thank you.
Right, which brings us on to the exclusion of the public and press. So just note, in accordance with section 100A of the Local Government Act 72, the public and press be excluded from the meeting for the following items, as they are likely to involve the disclosure of exempt information as specified in the paragraphs of the Act. Great. Will you exclude the public?
Yes, I can confirm that I have stopped the recording.
Yes.